Good morning, everyone. Happy Monday. Today is July 15th. Prices of BTC are currently at 10,300 approximately. And clearly, we've seen prices drop over the past few days and especially the last 12 to 16 hours. All right, so let's get to it. Let's see what we got going on, what price levels we're looking at, and exactly where we expect price to bounce, if at all. Okay, first things first, I'm going to look at the 4-hour chart. I cleared out all the drawing tools except just a clean trend line right here. So what we see is a couple touches from point 1 right there. Oops, I moved that already. There's point 1 right there, point 2, 3 points right there, and then the 4th point right here. Okay, now here's the thing, folks. I was honestly hoping that this trend line right here would bounce price at least a little bit higher, and this would give a pretty decent opportunity just for a rebound sell if possible up here. Okay, but it looks like the 4-hour is not holding up properly, and if we start looking at the RSI, I would say that it's essentially hit oversold right here. It just wicked past it right here, and now it's trying to bounce up a little bit higher. Okay, and I would say within this you see a bit of a bullish divergence. Okay, so if we see this price drop to here, all right, and we see this RSI from here to here, that's a higher low in RSI and a lower low in price. All right, so that is a bullish divergence that's playing out right now. Hopefully this pushes price up. One of the worst case scenarios that could happen is, at least on the 4-hour, is price goes up like this, rounds around, hits this trend line again, and then gets rejected. Okay, then we have bigger problems on our hand. All right, so first things first, what we need to do is cross above this trend line one more time, because it was a decent amount of support for us through middle of June, touch right here beginning of July, and then finally broke on through just about yesterday. Okay, there's a lot of selling happening. I was watching the order books on Coinbase, Kraken, Gemini, Binance, and there was definitely a lot of selling going on, and there weren't really the serious buyers stepping up to the plate and absorbing all that supply, but they did enough to hold the price up from collapsing to the 9,600 low that we had put in, I think over here, wherever that was. Okay, so basically what we have right now, folks, is a pretty sharp shakeout right here that we're seeing in price action, especially on the 4-hour. And if we start going back on the daily, this is another really critical trend line that I jotted down. Okay, first touch right here was created at the end of April, beginning of May. Second touch right there was 9th or 10th of June, and then the third touch we were hoping that price would actually bounce off and move away. Now there is still about 12 hours left in this candle right here, so what price needs to do is recover and at least close above 10,500. Okay, so what that would do is just push a wick past this line, but rather have the candle close above this trend line, which is also fine. Okay, but coming so critically close to not only the 4-hour as well as the daily chart, breaking some substantial support levels is really not looking good for BTC. Now, I'm not the kind of bear who's going to tell you that we're going to 5,000 or 6,000, but I'm telling you that structurally things are looking a little bit weaker. Okay, just as price goes up in a stair-step form like this, the same thing sort of happens when price, breaks down all the way like this. Okay, you're going to get incremental stops and then drops. All right, where exactly price is going to stop is really support levels like this that should be holding up and doing their job. Okay. Now, I've shown you this trend line, I've shown you that 4-hour trend line. Now let's look at the RSI as well on the daily chart, okay? The daily since beginning of March, okay, you can see right here, it's bounced off this critical level. It's about 47 points or so, Okay, beginning of March, it bounced off, moved away all the way into overbought territory. Even over here, beginning of June, essentially last month, it bounced off right around that same 47-point level and then moved away. All right, and went into overbought territory. Now it seems like we're sort of cracking that 47-point level on the RSI, and this is again not a good sign. We have maybe 24 hours at most to not only recover the RSI, because the RSI doesn't have to exactly bounce off this point. It would have been great if it did, but if it just bleeds just a little bit and then picks back up, that's a very positive sign. Okay, same with the price, right? We need to recover into and above this trend line in the next 12 to 24 hours at most. I would say it would even be better if it recovered in the next 4 to 6 hours, because that would show that the bulls are defending this trend line, this level, and they're willing to drive prices up. Another point right here that was really critical to hold was this 21 EMA and then this 30 EMA. Okay, the pink is the 30, the red is the 21. You could see all through this entire run, let me turn off this volume real quick. You can see all throughout this run, and I've mentioned this multiple times, ever since we bounced off it middle of February right here, first bounce, 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 over here bounce multiple times, over here bounce multiple times right here and right here, and now we're basically, we actually bounced off this beginning of July. And even over here, we tried to bounce off it 3 or 4 days ago, multiple times. But we finally broke on right through the 21 and the 30 EMA. Okay, this is, again, not a good sign. I'm not saying that we're definitely going to go down, but structures like this are, they were so well maintained through the last 5-6 months that it would be wise to keep holding these structures up, especially the 21 EMA and the 30 EMA, or the trend line that I just showed you earlier, to be able to continue that move up. All right. Now, with that being said, does that mean that we've essentially broken full bullish structure? Well, we're getting really close to it. Okay. First thing is what we did, which I did not want, is break lower than the closings of these candles right here, which is about 10,600. Okay, you can see these candles right here. Let me zoom in a bit closer. All right, I'm gonna mark this out right there. This is about 10,550, 10,600, whatever you want to call it. All right, these two candles right here closed above this level. That's all you need to worry about, okay? And then price sort of moved away from here, did not look back, and then hit again another resistance, and then came back around, hit this support right here, but then did not bounce off it, and then sort of just bled on through, okay? So once it just, this big daily candle yesterday just ripped through everything, it broke some critical support levels right here, which was the 10,600 closing right here. Okay. Now, I guess you could make the argument that, hey, isn't this still a higher low? Well, yes, you're technically right. All right. This was a low that was put in right around 10,600. All right. And then this is really the low that was put in a couple of hours ago. All right. This one was about 9,800. So this was about 9,650. This was about 9,850. So about $200 off. Okay. So what this says is, yes, technically we're still creating a higher low. I get that. But structurally, guys, it really would have been better to close this candle and this candle above these levels. Like I said, it's not the most bearish thing. It's just slightly more bearish than, the worst, than the best case, I guess. All right. Even if you look back here, right, once we had this big shakeout right here in the middle of May, you can see we closed these candles right around here. Okay, so about 7,250. After that, you could see that the next, following candles, even though they came down, they put in a higher low, went over here, kind of like a fake out, but then went lower, but did not close lower than these candles right here. Okay, they didn't even come close. All right, so this is really what I was trying to imply, is that this is structurally not the best thing to be looking at right now. I mean, technically this is really a lower high right here. All right, and by the means of looking at candle closings, this is a lower low. This is really the definition of a shift in trend and a shift in structure. Okay, so in our community, I did warn about this, and I actually did sell right around 10.6, 10.7 with a slight loss, and that's fine, because listen, at the end of the day, trading in technicals is never really about guarantees, right? They're about probabilities. Okay, possibilities and probabilities. And if you understand that, then you kind of become detached from the overall, emotions of prices going up or down. Right. So with that being said, I'm kind of a bit wary of current price structure, but I'm going to see if price is going to show me some strength and show me what it's got over the coming, 12 hours or 24 hours or so. Now, what could also happen, here's also the worst case scenario. Now, I showed you that here, if price hits this area right here and gets rejected again, that might be bad, right? Even if we start looking at that on a daily level, what could potentially happen is first level price could hit as this 10.5 area, which was these candle closings, or price could actually hit maybe around, I don't know, maybe around like 10.7 to 10.9. So I'll write down this one, and we'll just do right around here. Okay, so what we have is about 10,750 and then about 11,000. Okay, so the resistance levels in the way right now are 10,550, 10,750, and 11,000. Okay, if we start mapping these out by fibs as well, it looks sort of similar to fib resistance levels that we could be looking for as well. Okay, so we're going to go from this top to this shakeout bottom that we've had so far. All right. Okay, so you can see that some of the resistance levels, 10,500 or 10,600 is the 236 level. The 382 Fibonacci level is about 11,000. Okay, typically what you see often is the fact that when prices do retrace after being broken down, they try to get back up towards the 618 Fibonacci level at the very least, and this is where potentially traders can let go of their positions or open up shorts, because they don't see a lack of they don't see conviction or strength in prices pushing up. Rather, what they see is, okay, it looks like prices are struggling to get past 618, looks like it's going to go down further. Okay, so let's sort of watch these areas, like the levels that I just spoke about, which is 10.5, 10.7.5, and then 11,000, which again comes out to about 236 fib level and 382 fib levels. Okay, if those are already struggling, then guys, I would say things are going to get a lot more rough for the coming 2 or 3 weeks. Okay, but again, I'm going to keep watching price action and see exactly what it shows us over the coming few hours or a few days. Okay, but these are really the levels to watch. Now, if you don't know how to draw fibs, you don't know how to draw these trend lines, there's a simple indicator that you could also use. It's called the pivots indicator, and it kind of looks like this. And just sort of scroll through this right now. I don't know why it does that, but you can see right here, you see different numbers and lines on the chart itself. Okay, so what this shows is prior resistance and support levels, critical ones at least, that help create a footprint or a map of where prices could potentially bounce to, right? So for now, you can see something like this right here, which is price actually closed under this area, which was the critical pivot on the daily chart. I think that's around 10,700. And now it looks like if it does struggle to get above this pivot, the next big support is right around 7,600 or 7,500. I don't think prices are going to just collapse, till there, but there's a decent amount of support in the middle, right? So there's this one right here, this little order block between 9.4 and 9,000. Okay, so prices could potentially bounce there, or this big consolidation phase right here, which happened between, I would say, 8,800 and maybe about 7,500. Okay, so a lot of different support levels to watch too. Okay. But again, definitely not a positive sign that price has broken past 21 EMA, 30 EMA. Prices, sort of created a lower low in terms of candle closings. Prices are breaking past the pivot right here on the daily chart. And I would say even the 4-hour chart looks a bit worse. You can see prices have broken past the pivot. Did actually find a decent amount of support on the S1 right here, which is about 10,000. The next S1 is about $9,600. Okay. So again, if you're trying to figure out if you need to let go of your positions, maybe watch out for the retrace up towards 10.5, 10.7.5 and 11,000 and see if price reaches up there. And if it rejects, that might be potentially, your exit points. But if it does climb out with strength and volume, then maybe, you can keep holding on to the position because we could be, reversing back up. These levels, for the most part, folks, obviously they do mean a whole lot when looking at, technicals and price action, but never doubt the ability for, the real people who run the markets to not really give a crap about pivots and support and resistance levels, and then sort of crush price down and drive it up whenever they want. Okay, because when we look at something like this, right, the ultimate goal is to be able to get as much of the asset as possible into your hands, and that's smart money or professionals, etc. And when you see something like this, which has extreme fear showing in the market sentiment analysis, this is really a lot of retailers freaking out, panicking, selling, probably just selling at the lows, and handing over their Bitcoin or their crypto towards to the professionals and smart money, right? And so once they really collect all that, they've essentially gotten the meat of the market share, and they can then drive the market back up. Okay, that's really the goal anyway, right? There's an old saying in the financial markets that retailers are nothing but placeholders where they hold an asset for a specific time. They think they're actually making money, but really what happens is over time, the retailers hand over their asset to the professionals at a cheaper price and at a loss. And then the professionals, again, drive the prices up and sell it to the retailers at a higher price. All right. This is, in my opinion, applicable to the cryptocurrency space as well, because tradable markets, financial markets are run the same. It's run with human psychology, behavioral analysis, and understanding where people are likely to FOMO or panic. Right. All right. Another thing that I want to talk about is the Bitcoin dominance chart. Okay, this is aggressively high for Bitcoin in terms of dominance. And the last time we were this high, let me show you guys as per candles. Okay, you can see this like big wick right here that happened. This is really the top of the Bitcoin 20K bull run. And you can see we're hitting that same area right here. One thing that scares me is, this big collapse that BTC dominance had, and this was really the drop from 20K all the way to, I think, 6,000 or some, or actually no, I think in this span of time, I think it dropped to about 10,000 or so. Okay. So one thing that scares me is that when this dominance did drop, we did have a big alt season, but then we also did have a lot of, Bitcoin and solid coins lose a lot of US dollar value, even something like Ethereum. Okay. So do be careful and pay attention to something like this, because if we zoom in a little bit right here on the 3-day chart or even the daily on Bitcoin dominance, you can see we're sort of getting rejected around this 6970 level right here of dominance. okay? But we haven't quite started our reversal yet, you know, in the dominance chart, okay? So it could be possible that in the coming days, the dominance could just kick back up, you know, not really give a crap and just keep moving up, okay? And that would again further drive alts into capitulation, force people to sell their, you know, garbage coins and then jump into BTC, further pushing the prices higher, all right? Okay. So I've gone over, you know, the RSI of Bitcoin. I've gone over support and resistance levels. I've gone over fib markers to watch and pivots. You know, I've gone over the good picture, the bad picture, and the something in between picture, right? Now let's take a look at our weekly chart on Bitcoin, and this is also an area where I'm not too big of a fan of what's happening in price action right now, because here's the thing, right? When people say, hey, isn't this really a double top? Well, sort of, okay? I'm not going to deny that this is not a bearish looking sign, but it's also not as bad as, you know, people are making it out to be, all right? So first things first, you know, this wick right here, not a good sign. Gravestone doji, okay, for sure. Follow-up weekly actually pushed into the wick of this candle right here, right? This candle pushed into the wick of this one. What I was hoping to get is a close above 11,500, 11,600, which is really the top of this white box. What that would have indicated is that we have successfully closed over a pretty sizable resistance level, all right, which is this one that was created at the end of February and the beginning of March. But we did not do that, okay? Rather, what we did was we came up close to that level, poked another wick all the way into 12 or 13,000, and then, you know, got rejected hard back down, all right? Now, if we start looking at the volume analysis here too, okay, you know, this is a pretty decent amount of volume, folks, but it's not really that high to be able to drive prices down and start the next sort of reversal in the market, okay? If you look over here, here is something interesting, all right? The sell side volume right here, once it topped off in this candle right here, okay, the next candle actually had lower buy side volume and then significantly higher sell side, okay? Higher sell, really high sell, and then the highest sell right here too. But I mean, obviously this was all bought up, but there was still a lot of sellers here, okay? Over here, if you look comparatively, you know, there's a decent amount of sell side volume right here, but the sell is actually dropping off. And it actually even dropped off in this candle right here, which to me is a better sign in my opinion, all right? Now, if we see the next follow-up candle, this weekly right here, push back up again towards 11.5, 11.6, I would say there's a very high chance that we start breaking 13,000 in, I don't know, 2 weeks tops, okay? Because I just don't think there's going to be enough sellers left even at 12,000 or 13,000 levels, right? Majority of the retailer supply that's left in the market is already in professional hands, at least as per my analysis. I don't see a lot of, you know, retailers out there that are holding on to their coin by simply saying that, hey, I'm just going to hold on to this thing for, I don't know, however long foreseeable future. What they're really doing is they're trying to become traders in a market where they know that they can't be, all right? And while they're trying to become, you know, these successful traders, they're pissing away their gains, giving up their Bitcoin to the professionals, and the professionals know exactly where to drive up the prices, okay? They know exactly how to incite and create fear in the market. They know where to drive the prices, to what point to make, you know, the average person fold, okay? So with that being said, this weekly candle, we now need to see if it's going to dig up back towards, you know, this 11.5, 11.6 marker, because I would say that's a really, really positive sign, all right? And again, if it starts looking shaky around 10.5, 10.7.5, or 11,000, those might be your sell points, folks. Again, not investment advice, just giving you points to be able to look out for, you know, just to be careful, okay? Let's see how Ether looks. I know everyone was scared for Ether. I actually luckily got to tell my Cryptosomniac community that I'm going to be picking up Ether between 200 and 210, and I got filled perfectly in this wick right here, which is a really positive sign for me. Ether is actually creating a nice big hammer right here. It did break past this trend line, as you can see. This trend line comes from, let me see right here. This trend line comes from this point and these couple points right here. But this overall larger trend line, which comes from this point and this point, has still not been touched. And I would say this is a very positive sign that we pretty much are trying to bounce off this first trend line right here. Okay, so Ether is still, in my opinion, going to do really well in the future. And I want to collect more Ether, more Bitcoin, more of really the quality cryptos. All right, and maybe you are too. So if you're wondering exactly what our community is getting into, we have all our positions listed right here. Okay, the Advantage program is right here. If you go to cryptosomniac.com, all right, go to the products page right here, and you can find the Advantage program right here. And by the way, folks, if you go buy the technical analysis course, you will get 7 free days with the purchase of the Advantage, or with the purchase of the technicals course. Okay, you'll get 7 free days of Advantage if you buy the technicals course. So what you're really getting is, not only do you get to get a course that helps you understand what technicals are, but then you get to come into this community where we are very active in terms of trading our positions, and we talk a lot about what's happening in the market, where it could be going, where the other potential trades are. And so you get to test out your technicals of what you learned right here for the next 7 days. And potentially you could even pay off your course of $20, or the 97 that you have to pay. You could pay that off in the 7 days of trading with us. Okay, we provide a ton of education, a ton of information with the Cryptosomniac community, a very active and vibrant community. There's no shilling here. There's just a lot of traders in here who understand exactly what they're doing. Some who are just starting to become traders and investors, and others who have been doing this for a good amount of time. Okay, myself and Jordan have been doing this for a long time, so I hope you come join us and understand how to trade and invest in these markets with us. Okay, so with that being said, Ether is still looking good. You now have levels to watch on Bitcoin. The fear index is finally hitting extreme fear, which makes me kind of happy, honestly. I really hate it when you start seeing on Twitter or Reddit or whatever, and people think that, hey, from 13K, we're just going to go to 20,000 or 30K or whatever, so easily. And those are really the people that you need to shake out of this market, okay? And honestly, I'm glad they're gone. So with that being said, Ether is looking good. Bitcoin is looking good. You have support and resistance levels to watch. Just rewatch this video if you have not gathered that information. And that's all, folks. All right. Take care. I hope you enjoyed this analysis. Hit the like button, hit the thumbs up, leave me a comment. And again, come join Cryptosomniac Advantage or buy the technicals course. All right. Cheers.